How's it going today, guys? I am very excited to make this announcement, but I have a new membership site known as Stock Radar, where I'm going to be doing weekly stock analysis on stocks that you as the viewer get to decide on. I've been planning on doing this for a number of months now, and this is the perfect time for me to get this started, and I am just very excited about this. I've already launched this group to my email list and people who follow me on my social media platforms, but I'm officially now launching this to you as viewers of my YouTube channel. Now, there is going to be a sale on this for the first week only. The membership is going to be $19 a month, but for the first 7 days only, it is going to be $14 a month, and that is not just for the first month, that is for as long as you decide to be a member of this site. Now, every single week, we're going to be doing an in-depth analysis of a stock, and we're going to be covering 5 main points. First of all, the history of this company and what this company is about. How old is it and what type of business are they involved with? The type of investment this is. Here we were looking at AT&T, talking about whether or not this was a value opportunity or a value trap, and we label AT&T as an income investment. Second of all, we're going to talk about the dividend, how much of a dividend they pay, how long have they been paying that dividend, and how long have they been growing that dividend. Third of all, we talk about the pros and the cons of this investment. Why would you want to be an investor in this stock, and what might you want to worry about? The fourth thing we cover is the barriers to entry, or the moat this company has, or what protects this company from the competition, and what would stop someone like myself starting their own version of this company. And then fifth and finally, we do fundamental analysis of this company, looking at documents like the balance sheet, the income statement, and we do an analysis of this company to determine the overall financial health. So that is what you guys are going to get: 4 videos a week on in-depth analysis of a stock. And you will also get bonus lectures that are not going to be available anywhere else. Like I said, guys, for the first week only, it is going to be $14 a month, and the first month is fully refundable. If you take this and you decide that you just don't like it, just shoot me an email and I will get you that refund, no questions asked. So I'm going to be giving you guys a free preview of Stock Radar, my weekly stock analysis group. We're going to be going over Amazon stock and talking about whether or not this stock is priced for perfection. It's been a top performer over the last year. So let's go ahead and talk more about Amazon stock. How's it going today, guys? Welcome back to Stock Radar. I'm very happy to have you here, and today we're going to be talking about one of the most requested companies that I get asked about on my channel, and that is Amazon. Now, up until about a month ago, this was one of my largest investments, and in one of the bonus videos in this group, I talk about how I actually sold off my shares of Amazon and Google, not for any reason other than the fact that I am buying a house very soon, and I had to free up some cash. Now, I was heartbroken to part ways with Amazon. I had over a 25% return over 6 months with this stock, which was insane. That is not a typical return you're going to see from the market, but I did very well with Amazon. Again, I expect this stock to continue to perform very well. I had no reason to sell it other than the fact that I needed some cash. But we're going to talk more about Amazon, and a lot of people have concerns about this stock. Number one, because of that sky-high PE ratio, and number two, it is a very expensive stock. Now, do remember that the price of a stock has nothing to do with the actual share price, but the share price is very high, well over $1,000. So many people look at that stock, and they're afraid to invest that much money into a stock because they think that it's expensive. But again, that doesn't have anything to do with that share price. We're going to talk more about this stock. It is expensive based on other fundamental ratios, but that share price has nothing to do with it. So first of all, as we said, the stock is Amazon. They trade under the symbol AMZN. They are a newer company, just 23 years old. The type of investment this is an aggressive growth investment. They have a PE ratio of 319, a very, very high price to earnings ratio, and a market capitalization, as unbelievable as it sounds, of $707 billion. This is a massive company. Now, the section there where we normally talk about the dividends is blank because despite the size of Amazon, they are not paying dividends. They are instead investing back into the company and trying to grow as fast as possible rather than paying dividends to shareholders. And most people who are investing in Amazon are completely fine with that due to the performance of this massive growth stock. So they're not too worried about not getting their cash payments from Amazon because the company is so involved with reinvesting their earnings back into the company to just become more more and more dominant. So Amazon had very humble beginnings, starting off as an online bookstore, and they have come a long way. Now Amazon is the world's largest e-commerce retailer and the world's largest provider of cloud computing services. A lot of people don't even know that Amazon is involved in cloud computing, but they are absolutely dominating this business with 62% market share of cloud computing services. This is a massive business for Amazon. Another pro for Amazon is the fact that Amazon Video, which comes with your Amazon Prime subscription, is very competitive when it comes to traditional cable as well as other streaming services out there. Not only that, Amazon is producing award-winning original content, which is going to drive more people to this platform. So we are seeing cable dying off at this point. They're not dying just yet, but they are losing millions of subscribers every single year, and more people are looking for online streaming services, and Amazon has a very impressive package. With Amazon Prime, not only do you get all those benefits of that subscription service, you also get the Amazon Prime Music as well as Amazon Prime Video, which is on par with other subscription services out there like Netflix and Hulu. So they are competing with two very large industries, both the traditional cable subscriptions and the large companies like Netflix and Hulu offering internet streaming of content. Another pro for Amazon is something that I look for when I invest in companies, and that is that they are founder-led. So Jeff Bezos founded Amazon 23-something years ago, as we said, and he is still leading Amazon today. Not only that, he has a massive stake, a massive investment in Amazon, so obviously it is in his best interest to have that share price appreciate. It's going to increase his net worth. Personally, I always like to invest in founder-led companies. They tend to be more innovative, and they tend to have better culture as the person who founded that company is still in charge. Another pro for Amazon is that they have a very clear goal and mission statement, which is to become Earth's most customer-centric company. And I would say that they are more than delivering on that promise because there are millions of loyal customers to Amazon, myself included. I probably buy 15 to 20 different things every single month on Amazon. I want to get the most out of that Prime subscription. And now that we're talking about Amazon Prime, I want to go ahead and talk about how great that is for Amazon. Amazon Prime creates loyal customers. And the thing with that is the more you use it, the more bang you're getting for your buck. So every time I go to make a purchase myself, I always stop and I check Amazon first. And most times the price is better on Amazon. Or I'm looking to buy something in bulk, and I'm even buying my groceries on Amazon now. Many of my food products that are non-perishable, I buy it all on Amazon. I probably spend anywhere from $500 to $1,000 a month alone just on Amazon, and the way I see it is the more I'm buying, the more I'm taking advantage of that 2-day shipping, and I'm getting more bang for my buck as far as my Amazon Prime subscription. So Amazon Prime creates very loyal customers, and they are also finding that many people, including myself, are beginning our shopping searches on Amazon. So when most people would ordinarily go to Google and type in what they're shopping for, many people are now starting their search on Amazon. I'm one of these people, and that is huge because Amazon is now pretty much associated with online shopping. They're the online shopping search engine. Another plus for Amazon is the fact that while e-commerce is huge for them, it still represents a very small piece of the total retail space. So in 2017, e-commerce sales accounted for about 9.1% of total retail sales in the United States. And that number is expected to climb to 12.4% by 2020, and I bet you guys can take a guess who will benefit the most from that growth in e-commerce shopping. Another pro for Amazon is the fact that they are perfect for this new stay-at-home culture that is emerging, especially among millennials. Now, personally, I'm not a fan of this shift. I still like personal connections with people, talking to people over the phone, and you know, when you call a restaurant and order food, that's what I like. But a lot of millennials are afraid to call people on the phone. They do all of their ordering on apps on their phone, and they like to shop without having any personal interaction. And some people don't even want to leave their house. They just want to stay in their house. That's the way people are shifting. That's the way people are thinking. Whether or not you agree with it, Amazon is perfect for this new stay-at-home lifestyle that is emerging, where you don't even need to leave your house to order supplies and order your food, whatever it is you need. You can order it, and in 2 days, it's going to be sitting there on your porch. Another plus for Amazon is that this is a global company with global market exposure. We talked about this with Coca-Cola as well, as how this is a company that is involved in countries all over the world. It gives you exposure to global markets through a U.S. company. Another pro for Amazon is the business culture of innovation and disruption. If I were to describe Amazon and give them two characteristics, it would be exactly those. They are incredibly innovative and incredibly disruptive in the retail industry. And this again comes down to the mission statement of being Earth's most customer-centric company. They are looking to serve customers in the best way possible. They look at how customers are currently being served and they say, we can do that better. Another thing I like about Amazon is the fact that they have the ability to take on massive projects and they can solve massive problems in the world. And that again comes from the talent at Amazon, the size of this company, and their ability to solve large problems. I kind of compare this to Tesla, where Tesla takes on these very large problems. And what's interesting is the fact that Jeff Bezos often says that these large projects they are taking on, it's going to take them 5 to 7 years to become profitable with these businesses. And that again just comes from having that long-term, long-sighted vision that Amazon is so well known for. A lot of the times, some of the things they are doing don't make sense today because they are thinking so far forward into the future, and they're not looking for that short-term gratification or short-term reward for their businesses. They have no problem with making long-term investments because they know it will be better off for them in the future to be doing this today. Now guys, I am just covering my main points as to why I am so bullish on Amazon stock. There are many other reasons. For example, you could talk about the Whole Foods acquisition and how they are looking to get into the grocery space and eventually build checkout lists. Grocery stores in this country, they're getting back into books as far as having storefront bookstores. There are so many reasons to be bullish on Amazon. I really couldn't cover all of them in this video. I just wanted to cover my main points. And the final one I want to talk about is the Amazon Alexa-enabled devices. Now, these Amazon-enabled devices are wonderful for so many reasons. First of all, the potential IoT or Internet of Things implications, where you have interconnectivity of devices in the home, where Amazon can be connected with your lights or your security system, and you can get all kinds of feedback, and you can also control these devices with your voice. It's also the fact that this is a very convenient tool to play music and ask questions and get the weather, and also it is a way for you to seamlessly order things on Amazon. Oftentimes we think of what we need while we are in that location. So if you're in the kitchen, you think, okay, I need to buy this. Now, instead of writing this down on your grocery list, if you have Amazon Alexa, you can just say, Alexa, add this to my grocery list, or even say, Alexa, purchase this for me. So what Amazon has done here with these devices is provided something that offers tremendous value to the consumer. It allows you to listen to music and control your home, but it also allows you to be an even more loyal customer to Amazon because you're going to be ordering things through that Amazon device. Okay, so now that we've talked about all these pros for Amazon, it is time to move over and talk about the cons of this stock. First of all, you cannot get over the fact that this stock is very expensive. Currently, they have a price-to-earnings ratio of 319. That means that this stock is trading at 319 times its earning potential. Now, the reason for this, as we all know, is the fact that Amazon invests heavily into the growth of their business, and they would rather operate near break-even and be as innovative as possible than reward shareholders with dividends, have higher earnings, and have somebody else edging forward. They want to be the most innovative and disruptive company, and that requires a lot of capital investment. Now, looking at the forward PE, it is still a 96, which is very high. So Amazon stock is very expensive, and it is a stock that a lot of people can't afford, again, because of the fact that the share price is so high. Now, there are ways that you can buy partial shares of stocks. I've never done it myself, so I can't speak to that, but I know there are services that offer you to buy partial shares, so you could throw $10 into Amazon stock. But as a complete beginner, if you're looking to buy Amazon stock through a mainstream broker, maybe like Robinhood, you're going to have over $1,000 to invest in Amazon stock, and a lot of beginners don't have that. So one con for this stock is it doesn't have great accessibility, especially for beginners. Another con for Amazon is the fact that they currently have a 1.7% profit margin. Now, as I've explained already, this is because they are investing as much as they can into the growth of this company. Now, most Amazon shareholders trust Jeff Bezos. They know that he knows what he's doing and he can better use that money to grow the company. But somebody looking at this stock on a fundamental level, seeing a 1.7% profit margin, that does not make for an appealing investment. And the sky-high price-to-earnings ratio videos do mean that Amazon is priced for perfection. Now, before you think that I'm wrong about that, I would say that Amazon does have amazing growth potential, especially with the projected growth of e-commerce, but you can't get around the fact that the share price has been climbing so fast, and any one hiccup for Amazon could result in a correction with this stock. Do I expect that to happen? Personally, I do not. We did see a dip in Amazon when we saw the sell-off on the Dow in 2018, but again, it was not that much of a correction, and they bounced back like overnight pretty much. They bounced right back. So I don't expect to see Amazon stock tumble by any means, but understand that at the current valuation, Amazon needs to execute with perfection in order to give shareholders what they are looking for, and if they are not doing that, then you may see a sell-off take place with Amazon. So that is the one major con with this stock, is it is very expensive. So moving on, let's talk about the moat for Amazon, or their barriers to entry. Basically, what stops me from starting my own Amazon-like business? Number one has to be their fulfillment network. They have an absolutely massive fulfillment network in order to have 2-day shipping in all these different places, and in some cases having overnight shipping or things like that. It requires a massive fulfillment network. Now, how big is this network? In the United States alone, they have 119 Amazon fulfillment centers. What's amazing to me is how much these facilities actually cost. The most expensive one that has been built is in Utah, and that was a $200 million facility. So if I wanted to start my own Amazon-like business and offer 2-day shipping all over the United States, I would have to build hundreds of multi-million-dollar fulfillment facilities in order to do that. That makes this a very capital-intensive business, and one that a lot of people cannot do. The second barrier to entry for Amazon is that they have very loyal customers. I am a very loyal customer myself, and in September of 2017, they had 90 million Amazon Prime subscribers. This, again, as we said, creates for very loyal customers, because the more you order on Amazon, the more bang you get for your buck, and you are getting more out of your subscription. Number three is the fact that Amazon is sitting on a massive amount of data. They are a data company, and again, that Whole Foods acquisition just gave them access to more data as far as customer shopping habits. So knowing what products to recommend to people, what products to show on the front page, there is a massive amount of value in that data, and that is something that people could not compete with. It would be very difficult to figure out what you should be recommending to people, and there is tremendous value in that data. Number four is the economy of scale, and what that means is the fact that Amazon is buying so many products from these companies, they are able to negotiate pricing and get things at a cheaper price. If you were going to start selling things online and have your own e-commerce business, you would not be buying anywhere near as much as Amazon is buying, and as a result, you are going to be paying a higher price for those goods. They can negotiate because they have leverage and they have a massive amount of volume, and as such, they are able to compete on price because they are so large. And the fifth and final barrier that I see here for Amazon, and there may be others that you guys see as well, is their project appetite. It's the fact that they are able to take on these massive projects that many other companies out there are just too small or too timid to take on. If you told the company they were going to be taking on a project and they wouldn't see any profits from that for 5 to 7 years, most of them would shy away from that. But Amazon runs towards those problems. They have a massive appetite for these big problems, and they execute with perfection. Anyways, guys, that wraps up the beginning of this talking about Amazon as far as the stock, the fact that they don't pay a dividend, the very high PE ratio, the pros and cons, and the moat. Now we're going to switch over and talk about the fundamentals of Amazon stock. Okay, so now we are going to look at some of the fundamentals for Amazon. First of all, we are looking at the assets. Total assets for Amazon have grown every single year at an average rate of 17.8% per year since 2014. And total assets grew 62.2% from quarter 1 of 2017 to quarter 4 of 2017. What I'm typically looking for is double-digit growth with total assets, but seeing total assets growing 62.2% in 1 year from quarter 1 to quarter 4 of 2017 is absolutely incredible. Now, cash and cash equivalents have grown as well every single year at an average rate of 12.2% per year since 2014. And cash equivalents grew 32.9% from quarter 1 of 2017 to quarter 4 of 2017. Now, it is important to remember that quarter 4 is always going to be the best quarter for Amazon due to the increased sales for the holiday shopping season. So what we can gather from this is that Amazon is sitting on a pile of cash and total assets are seeing consistent double-digit growth, which is something I love to see from an investment. The growth of assets in 2017 was unbelievable. And now we are going to look at the liabilities for Amazon. So total liabilities have grown every single year at an average rate of 34.6% per year since 2014, and total liabilities grew 74.7% from quarter 1 of 2017 to quarter 4 of 2017. So what we can gather from that is that total liabilities are growing at a faster rate than total assets, which is not something you typically like to see as an investor. When we look at the coverage ratio for current assets and current liabilities, we see that current assets have coverage of them, but not a lot. They have a 1.04 to 1 coverage ratio for 2017. That means that all of the assets that are in cash or readily convertible to cash within 1 year cover all of their short-term debt or debts expected to be paid in 1 year. So what we can gather from this is that Amazon takes on a lot of debt to grow at the fastest rate possible, and some investors might not be comfortable with the slim coverage of current liabilities. However, Amazon has a proven track record with this break-even business model, so most people are not going to question it. Next, we are going to look at stockholders' equity and net cash flow from operations. So we saw that stockholders' equity has grown every single year at an average rate of 37.4% per year since 2014. And again, what I am typically looking to see is double-digit growth. Seeing an average growth rate of 37.4% is stellar. Stockholders' equity grew 27.8% from quarter 1 of 2017 to quarter 4 of 2017, equally impressive. Now, net cash flow from operations has grown every single year at an average rate of 42% per year since 2014, and the net cash flow from operations grew 221% from quarter 3 of 2017 to quarter 4 of 2017, and this is mostly attributed to holiday spending. So what we are seeing here is that stockholders' equity is growing at an incredibly high rate, which is something you always like to see as an investor. So looking at Amazon stock performance, we see that Amazon has had stellar performance over the last 5 years. Amazon stock is up 71.4% over the last year compared to a 16.2% return from the S&P 500. So Amazon has significantly outperformed the market over the last year. And equally as impressive, over the last 5 years, Amazon stock is up 445.8% compared to an 80.2% return from the S&P 500. So Amazon has also significantly outperformed the market over the last 5 years. So what we can gather from this analysis is that Amazon is an aggressive growth stock and the wind appears to be in their sails. However, the downside with this stock, and the only downside I can see, is that sky-high price-to-earnings ratio. And the big question is, are they priced for perfection? And this also blew my mind looking at this here. As I'm sure you guys know, we saw a correction take place in the market between January and February of 2018. On the right, we have the S&P 500, and on the left, we have Amazon stock. A lot of people want to get in on Amazon stock and they want to wait until the right time to buy it. But looking at what happened during that correction that took place, we saw that this barely even impacted Amazon stock. Amazon stock had a very slight correction, but it's already back trading at a level above where it was before the correction had taken place. And if you look at the S&P 500, the S&P 500 is still lower than it was before that correction took place. So you're going to have a very difficult time trying to buy Amazon stock on a dip looking at things like this. And finally, we have some key financial notes for Amazon. So gross profit margin has increased every year since 2013, reaching 37.1% in 2017. Net profit margin, however, was just 1.7% in 2017, so they have a very slim profit margin because they are investing heavily back into the business. Now, Amazon reports their income in 3 segments. That's Amazon Web Services, International, and North America. And sales for the Amazon Web Services segment grew 42.9% in 2017. Sales for the International segment grew 23.4% in 2017. And sales for the North America segment grew 33% in 2017. These numbers are absolutely fantastic. Amazon is seeing incredible growth in their operations. However, it is worth mentioning that the international segment is still operating at a loss due to capital investment in infrastructure for fulfillment. Anyways, guys, this wraps up our analysis of Amazon stock. I hope you guys enjoyed this, and I will see you in the next video. I hope you guys enjoyed this video talking about Amazon. If you guys are interested in joining Stock Radar, remember for the first week only, it is going to be just $14, and that price is going up to $19 after that. And again, if you guys start this off and you watch the videos and you decide that it just isn't for you, all you have to do is send me an email, and that first month payment is fully refundable. Anyways, guys, thank you for taking the time to watch this video, and for those of you who decide to join the membership, I just want to sincerely thank you for supporting my channel and helping me do what I do every single day here on YouTube. But thank you guys for watching, and I hope you have a great rest of your day.